Mining Conference this week. And Jonathan, we appreciate you taking some time out of a busy day to talk with us. But obviously the world is watching and reacting right now. You've been fielding questions, but you've also been outlining your game plan in the face of this tariff news. Can you walk our audience through what you're thinking right now?
Yeah, hi John, very good to be with you this morning. Yes, we've been anticipating the potential for tariffs for many months now, and of course have been putting contingency plans in place. To put it into context for our business, around 14% of our global revenue is transacted from Canada into the US, and that's predominantly sales of zinc and lead metal from our Trail refinery in British Columbia, where we sell that into more than 30 US states to a whole series of customers based there. In anticipation of these tariffs, we've done a couple of things. Of course, we've been extensively engaging with our customers over recent months to understand their position with respect to tariffs and their views on where they might source their much needed metal going forward. In addition to that, we've been exploring other avenues for the sale of our metals if we need them, including reserving capacity at ports and warehouses so we could export additional metal to Europe and to Asia, which are key markets of ours already, in the event we need to protect ourselves from the impact of tariffs. More generally with commodities markets, we've seen them interrupted in the past for various events, and we still maintain the same level of buyers and sellers in those markets. And commodity markets, because the product, of course, by definition, as a commodity is fungible, they have a way of rebalancing, and we expect the same to happen here. Of course, what we do believe is that the impact of tariffs will ultimately be inflationary, because it will extend supply chains. In our case, rather than selling directly into the US, we might find ourselves shipping product farther afield. That increases costs for us, but it's also inflationary for the whole industry. Ultimately, and this is the real shame of all of this, John, we think this is inflationary for US consumers, and ultimately will hit them in the pocket directly. So, we would prefer to have ongoing close integration between Canada and the US, particularly on the critical minerals file, where there is so much opportunity. But, as you've said, we have to put contingencies in place, and that's what we've been doing.
And I appreciate your candid comments, and there's a lot to unpack with what you said. So let me go through some of it. Now, first of all, just the idea of finding new markets, even if they're existing markets for your product, but just to retool the business to shift products somewhere else. It's easy to say. Is it actually easy to do? I mean, give us a sense on how hard your team has to work to make that happen.
Yeah, look, it's disruptive. There's no doubt about that, and we'd rather not be doing this work, of course, if we had the option to continue. And we'll see what eventuates here, of course, John. We might continue with our sales to US customers in the event that they're willing to pay the tariff here for those imports. Look, we maintain a very broad customer base, well beyond North America, throughout Asia and into Europe. So we have established relationships there. In the event US customers decide to buy from other countries, for example from Europe and Asia, then that opens up space for us to move our products into those regions. So we're communicating with those customers. We'll put the contractual arrangements in place to support that, and therefore, in terms of the impact to our business, we expect it to be minimal. But as you say, this is quite disruptive, and in the event, of course, that tariffs are short-lived, and as I said, we'd rather they weren't here at all, but if they're short-lived, we would end up having to reverse a lot of the arrangements that we put in place. And of course, we would rather be focused on other things, running our business as productively as possible, investing in new copper mines, which is core to our strategy, rather than dealing with this unnecessary interruption in global trade.
Noted. And, I wouldn't normally ask you such a specific customer question, but can you shed any insight on what the customer conversations in the US have been like, what they have been saying to you throughout all of this?
Yeah, look, to date, they value the long-term relationships they have with us. They value the security of supply that they get from Teck, and they value the quality of the products that we supply. And to date, they've told us that they remain committed to continuing to deliver on those contractual commitments and continue with the supply. But of course, the same way that we've been addressing contingencies for our business, they will have been assessing contingencies for theirs. And in the event that these tariffs stick, we'll have to see how that unfolds in the weeks and months ahead.
I would be curious, Jonathan, to know if you had to put forward your best ideas for how Canada itself approaches this. Obviously, there's no easy path for the federal government or provincial governments, but at the same time, a lot of people have looked at both the need to be ready in the short term, but also the opportunity in the long term, and the conversation we can have around business in this country over the long term as well. What would you say on that, on this moment for Canada from that perspective?
Yeah, look, that's a great question, John, and we do see a lot of opportunity here. I mean, it'll really energize Canada and provide impetus now to take some of the steps with respect to unlocking the value of the critical minerals opportunity that we have here in Canada. The government can help with simplifying and streamlining regulation that we have here. They should think about taxation in the country, because that's, of course, a relative game between one country and another, and the relative competitiveness of Canada is something that we need to improve. And then in addition to that, there are some phenomenal resource basins in Canada, many in the north or in remote regions, which could be unlocked by an investment by the government in road and power infrastructure, which would enable us to unlock more supply. The other thing we do in Canada, and this is particular for Trail, we produce a number of metals that are incredibly useful for national security and defense applications, and a great example of that is germanium. We are the only primary producer of germanium in North America. The US is heavily reliant on that supply of germanium, and the alternative market for that product is China. So we would prefer to continue to work with the US and sell this germanium and work in partnership with them to help Canada meet its aims of being a critical minerals leader and allow the US to get the security of supply that it needs for energy security and national security.
Those are obviously a lot of different avenues to be watching closely. The Prime Minister is not an economist, so he stopped short of basically calling out a recession, but a number of economists today have said if this continues, obviously it's going to be hard for Canada's economy to avoid contraction. Any sense on what your team's talking about in terms of what this means for the economy as a whole if the tariff threat lingers over the next few weeks, next few months, just doesn't go away at all?
Yeah, look, we do believe that this will result in potentially hard times for the Canadian economy. As I mentioned before, we also think this will be inflationary for customers and consumers in the US. So we think actually this will be a challenge for both economies. Of course, John, though, we're a global business and we look very much at global markets. And one of the things we see here is that the fundamentals for the commodities in which we operate and in which we invest remain very much intact. In particular, copper for us is front and center of our strategy. Demand for copper is underpinned by ongoing urbanization and development in certain countries around the world. It's underpinned by energy transition and electricity demand rising, and it's also underpinned by growth in AI and data centers. So we see the fundamentals for copper demand and the copper industry to be very strong. That's why we're working on a very large investment here in Canada in the Highland Valley Copper Mine in British Columbia. It's already Canada's largest copper mine, and we want to extend its life through till the mid-2040s. We're also looking at greenfield projects in Mexico and Peru, so we can continue to grow our business and continue to increase the copper that we supply to the world that it so badly needs to meet all of those secular drivers that I just referenced.
Jonathan, really appreciate you sharing that story as well, because we've talked about it many, many times before, that long-term opportunity, especially associated with copper. And on most days, we probably would talk about that. Obviously, a lot more to talk about today. Thanks very much for your time. We appreciate it.
Thank you, John.
Jonathan Price is the President and CEO of Teck Resources.